Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
If you're interested in multifamily real estate but don't know how or where to begin, our guide on how to start investing in multifamily real estate breaks down everything you need to know about identifying good investments plus real-world examples. Download your copy in the show notes or visit lifebridgecapital.com/start now to start your journey in multifamily real estate. This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today, our guest is Dustin Miles. Thanks for being on the show, Dustin.
Yeah, thank you. I'm excited to be here.
Yeah, Dustin started a candy business at 8 years old. That's incredible. His bus driver called him the Candy Man. To date, he has syndicated 11 deals, 6 of which have gone full cycle. That's a far stretch from the candy business, right? Outside of business, Dustin is on the board of Cancer Care Services, played soccer since he was 4, and is an avid runner. He ran 1.5 mile marathon each week for the past 26 weeks earlier this year. He has a goal of running 1/4 in under 60 seconds and 1 mile under 5 minutes. Wow. You are a runner, no doubt about it. That's not me. That's not my story. But Dustin, welcome to the show. It's interesting. You were thinking like entrepreneurial things, even at 8 years old, whether it's candy or whatever, you were thinking, differently probably than many of your peers then. And it's probably only grown. And obviously now you're doing some major things in the real estate business and other areas. Let's talk about a little bit about how you went from, the candy man to multifamily syndicator success story.
Yeah. I guess I don't know if I was born with it or maybe my dad had a business. I don't know if I got it from there, but definitely caught the entrepreneurial bug pretty early on. And, between the candy business and then I was, little kid, if there was a way to make money, I was trying to do it, whether it's mowing lawns or buying and selling baseball cards, or I threw a carnival that was terrible. But anyways, just kind of put myself out there, I guess. And then in college, I had e-commerce business. So I had I went to engineering school at UT Austin, Hook 'em Horns. And so I had 2 backpacks. I had one backpack was my engineering backpack. And then my other backpack was, I don't know anything about them, but I was selling Pokemon cards around the world at the time. And I knew I could make money. And so I, was capitalizing off the opportunity.
You said you didn't know anything about Pokemon cards, which I knew not the first thing either, but you were doing it. You were making money doing it.
Yeah. I knew there was money to be made. And so I was selling them all across the world. And so I would, as a college kid, and my friends would look at me a little weird that half of my apartment was full of Pokemon cards. And so it was interesting for sure.
You were seizing the opportunity while it was there. That's for sure. Yeah. So, you had the engineering backpack as well. Maybe you had some other plans or with that degree or, where you were headed, but now you're multifamily real estate. How did you get from that to where you're at now?
Yeah. So after college, I was flipping houses and did rentals and all that good stuff. And then I really tried to give the engineering thing, the old college try. And out of college, I had an engineering job, and I had an engineering job for quite a while. And I went from full-time to part-time in 2018. So I worked for a large defense contractor. And, I was there for a long time and then finally kind of hung it up earlier this year, actually. And, kind of my transition was I started syndicating, started investing passively almost a decade ago. And fortunately, the timing was pretty good there as far as pricing and cap rates and all that good stuff. But, got into putting deals together, put my first deal together in 2014 and had done 11 of them. So I'd been kind of slowly building up from there. And so it's been good. Obviously I'm happy that I started when I did. I wish, obviously looking back now, I wish I would have bought everything under the sun, because, with cap rate compression, you really couldn't miss. But that's kind of, the flow, but it was really difficult. It's really difficult to have a full-time job and to do the syndication business, especially the way I was doing it. Because right now a lot of people have teams and all that other stuff. When I first started, people didn't partner up, and partnering was not as big of a thing then. And so it was really difficult. I was having to wear, all the hats: underwriting, raising funds, everything, whereas now you'll see teams of, a few people sometimes, and they each have their own responsibility. So the way this business has really shifted is pretty interesting. And actually, I think it's all for the better. As you mentioned, I grew up playing soccer, and I fortunately still able to play today. And so I'm very much a team sport guy. And so this right now, teaming up with people and all that feels very, very comfortable to me. And I really enjoy that.
You mentioned people didn't partner up, back then, or when you first started in this business. What were some of the difficulties, though? Maybe you were working full time. I don't know if you were married then or not, but family, and then also trying to get a real estate business going like this. What were a couple of things maybe that you learned that were unexpected during that time of pushing the business and doing all that?
I felt like I was, so I was, I'm divorced now, but I was married and have a son and all that. And it was, really, really busy. There was a lot going on, all the time. And challenges were, time and trying to be in 3 places at one time was difficult. I was probably at a networking event, at the time there weren't as many then. So which is kind of nice. Now, I'm in DFW, which is kind of, the mecca of apartment investing, just because there's a few different groups here. But I could go before COVID, I could go for probably 3 out of 7 days. I could be at an apartment investing event that was solely focused on apartment investing. Then it was a few times a month typically. And, but yeah, just really, time was pretty tight. There weren't as many resources back then. When I first started out, it was hard to find people that were in the multifamily game. And I remember actually, so if I kind of rewind, back to 2008 or 9, what kind of got me going was I met a guy that owned 22 units. And, now that's nothing. Now you go to a conference and people, if they don't own a few thousand, that's not, cool, I guess. But yeah, so I met this guy who owned 22 units, and he purchased them out of state. And so for me, that at the time, that was mind boggling. And then I went to, it's Lifestyles Unlimited. I went to some of their events and all that, and I met different people that own 50, 100, maybe even a few hundred. And then not too long after that, I went to lunch with a guy that owned 10,000 doors. And so anyways, it was interesting, but there wasn't as much access to information. The analysis tools were really poor then. The understanding how my first deal that I syndicated was an assumption deal. No one assumed loans. That was thought of as the worst thing in the world, and no one did it. And so there wasn't a lot of information on how to do this. And, even though I was plugged into a group, I was in Sunrock's group for a long time, even there and some of the lending resources, there just wasn't as much information now or then. Now mean, tons and tons. I mean, obviously, you have your podcasts, and there's some other podcasts as well. And there's lots of YouTube channels, but really just the access to information was pretty limited back then. And if you were a large group, you probably had a lot more access, but kind of the small guy that was busy, running around, had a full-time job, and then trying to do some apartment deals was definitely challenging.
No doubt about it. Some major challenges there. I experienced it myself. I didn't start that long ago. 10 years ago doing this, there was definitely a lot more opportunity, but I would say I relate in a big way to many things you said. One, when you start going to conferences and you start exposing yourself to so many other people in the business, is when I started meeting people that were buying 100, 200 unit properties and only been in the business a year or two. Like the light went off that, wait a minute, you know what, if they can do it, I can do it too. Right. And there must be a way. There must be a way, and it's not just after you've been in this business 20 years, like I'd always told myself, before you can buy an apartment building. And so, what about, you mentioned, like, I think you said like this past year, you actually went full time in apartments. Is that right? And so tell me about that thought process and just transitioning from that, so-called quote, secure W-2 to now full-time entrepreneur.
Yeah. I mean, I had some hurdles along the way. So, I had it built up a decent portfolio. And so kind of my cash flow, took a hit in 2019. So I had a decent number of deals, and cash flow was pretty good. So I was selling the properties, and so, which is great, made money, but my cash flow went away. I had cash, but my, consistent cash flow kind of went away. So it was kind of, since then it's been building that back up, and then 2020 was obviously kind of a slow year, but yeah, it was basically kind of building that back up. Once I got the cash flow back up, then I, felt extremely comfortable kind of stepping out. Looking back, I, probably would have been good to go ahead and just move on. But, I'm pretty, despite the fact that, I've been in this business for a while and there is a certain level of risk, I'm extremely risk averse, and especially financially. I mean, so for me, that was, really kind of, that was a big step, kind of stepping out. But yeah, it was, it's an interesting transition. It was definitely probably a long time coming. Some of my friends kind of make fun of me and be like, man, you should have left a few years ago. And I probably should have, but it, the timing worked out very, very well. And decided to be right.
Tell me about the mindset shift towards partnerships. You mentioned early on, it just wasn't viewed well, in our industry as far as partnerships, but now it's very different. And tell me about how that changed, why that changed, and where that's, how that's helped you in your business.
So I think initially, so the first deal that I did partner up on, but again, that wasn't like a typical thing. And I honestly partnered up because I'm always looking to mitigate risk. And I'm friends with the guy and all that, same as King Wolf, but I partnered up with him. I wanted to help mitigate my risk. And I knew if he was part of the deal that, and he had something to lose, that he would be, paying attention to it and all that. So I did, partner up. And then actually after I did my first two deals, then I went away from partnering up because, honestly, I was wanting to leave my job. And so when you partner up, your pie gets, divvied up. And so I did a few deals on my own, and that was a lot of work, and that was very stressful. And then, so I went back to partnering, and I really liked the partnering model. And so some of the partnering that I'd done was basically, it was someone that hadn't done their first deal. So I was kind of, the more experienced person in helping them to get their first deal and all that. And then, now today I have kind of a mainstay. I partnered up with different people over the years, and so pretty excited to, partnered up with Hayden on a permanent basis. And so really excited about that. And just in terms of, teamwork and leverage and things like that, I think a lot of people think that one, they either need to start in single family, is one thought, and then they transition to multifamily, or they think they need to start smaller in multifamily and then kind of build up from there. And what was cool about, my business partner, Hayden, was he did single family and all that with his dad in the past, but he didn't start it, 25 or 50 or even 100 units. He went from single family to, 228 units on his first deal. Now that's not going to be everybody's story, but I think that just illustrates the power of what teamwork can do.
So powerful, right? When you start putting people together and you can stay in your lane and have your focus and things you're really good at. Tell me about maybe how your all skill sets are helpful in that partnership. Do you have different skill sets, or how do you work through things like that?
Yeah, so we do have different skill sets. We, as far as morals and just how we view life and our goals and all that are similar, but we do have different skill sets. So he has more of a marketing background, and he's excellent at that. And then I went to engineering school, and I like numbers and numbers like me. And so that's just more of kind of what I brought to the table. And, I've done quite a few deals. And so you just have a lot of experience, and I've bought deals in different markets and different types of, asset classes. So kind of bring, that as well. And so that's kind of how we work. And then we had a webinar, which was interesting. We had a friend of mine, and he kind of helps teams and things like that, especially, kind of diagnosing, where people should play in the team and all that. And so we did a webinar, and we both took the disc test and all that, and like, oh, wow, we really are similar. So that was kind of a nice, reaffirming thing. But I'm a CS and he's an SC. So I'm the precisionist, and then I can't remember what his label is, but anyways, we're just means we're similar in terms of personality and all that. So
what would you, looking back now, being in the syndication business for a number of years now, doing many deals, and thinking through your partnerships, and, you started a partner, then you said, you know what, I don't want to split that pie with anyone else. I'm going to do my own, and then I'm going to go back to partnerships, and you've grown in that, obviously, and your business has grown now because of partnerships. What would you have done different, looking back, as far as partnerships specifically are concerned?
I would have, partnered up. I think partnering up with one person or one group, and then just, as you mentioned earlier, just kind of, staying in your swim lane and really focusing, I think would have been really helpful. I think that would have been a way for us to scale and all that. I think that, I was in Brad Sumrock's group for a long time, and so I think that, especially initially, helped me some. And so that, that was, a great boost. But I really think that having a mainstay partner and really focusing would have been, helpful.
A few final questions, Dustin, especially I'd love to hear this from your experience and your attention to detail and the numbers and those things. How do you prepare for a downturn?
Yeah, so we stress test the deals. Obviously, everybody does that, and everybody says, "Oh, my underwriting's conservative," blah 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 blah. But really, at the end of the day, you can do. We really focus on location. you can put all this money into a property. You can say you're going to move it from a C to a B or a B to an A. But at the end of the day, you can't change your location. You can't change your schools. You can't change your neighbors. You can't change the submarket unless you buy the submarket. And there's a few groups that have basically bought a submarket, back during the recession. They did change that submarket, but that's few and far between. But so we really, really hone in on that location. And so we're looking at, what did this area look like during the recession? What did this look like during COVID? I think COVID was a great test, a great stress test for, what a property is going to look like under certain conditions. So we're looking at a number of factors. And then, so one thing and I invest passively with other people. But so what I look at is kind of a worst case scenario. Okay, what is their T3 income? If they can't do any better than the T3 on the income side, what does that cash flow look like year one? And so if I like that number, then I move forward. If I don't, then, that's kind of something I kind of look at. And then one thing, a lot of people throw out the debt service coverage ratio, DSCR, that, oh, this is great. No, here's all the cash flow. But what does all that look like once your IO falls off? And, I've seen some deals where the IO falls off and that cash flow looks pretty dismal. And so we look at that as well. We want to make sure that, if we do end up holding this, longer term past that IO period, that, that we're still in a good spot. So, but, I really believe at the end of the day, and I've seen assets where I've seen multiple management companies manage that same property and that property not succeed. And that's because you can't change the submarket. You can't. So we really, really hone in on that submarket. We do a tremendous amount of research. So we're buying on the newer end of the spectrum, and that's also a risk mitigation plan for us. We don't have to worry about 50-year-old pipe, 50-year-old chillers and boilers and all that stuff. And that's just another, risk mitigation. So yeah, and then at least for the markets that we're looking for or looking in, whether you buy A, B, or C, the cap rates are all on top of each other. So, that's also kind of an indication. It's like, well, if my return's relatively the same, I'm going to go buy newer all day long.
Any other metrics as far as stress testing, like you mentioned, or even, with your experience in passive investing and also underwriting and just the attention to detail, like I mentioned, what about just reserves? How do you look at that?
I want to see that, I like to, I've been through some deals that were more challenging and tougher. And, so I like to have plenty of cash reserves when I'm doing a deal. And I like to see, the deals that I get involved in, especially when things are, I guess there's light at the end of the tunnel, so to speak, on the whole COVID thing for the most part around the country right now. But last summer and fall, that was not necessarily the case. There was a lot of, what if, and, so with the deal that we bought in the fall, we had quite a few quite a bit of cash in reserves, just in case, things did kind of, not go the way we were planning it to happen. But, because there in the fall, you had, not only was COVID, maybe going to go away, the vaccines were starting to be kind of rolled out, but then you also had, the presidential election was what it was. And there's always kind of fears over, what's going to happen if it's a new president, blah, blah, blah. So there was a lot of uncertainty. And so, when there's uncertainty and all that, and just in general, we want to have plenty of cash reserves. So.
No doubt about it. You mentioned an interesting point a minute ago too. You said like you've been in the market long enough. You watch numerous property management companies with the same property and can't seem to bring this property up, right? It can't seem to help it to perform better. I just think that's neat to think about, right? The location is so important that it's not just the management. It's not just poor management, right? Always. Sometimes it's just the location. Is there a resource that you have that helps you to see maybe who older management was or anything like that?
I don't. That would be cool if there was. But no, I don't. It was just I guess having been in the market for a little bit and, I was I was a passive investor in the deal. And so I saw multiple people, kind of come through there and the results were, relative. And it's not like they were changed out every few months. I mean, every management company got at least a year or two in and then, was swapped out. So I don't have a resource for that. No, that would be very interesting.
Yeah, no, I just thought it was a neat fact to think about, especially if you got experience in a market for a number of years, you're just going to start to know those things or see those things over time. Right. What about any predictions that you have just for the real estate market over the next 6 to 12 months?
Yeah. Pricing heated up a lot quicker than I thought it was going to this year. Basically, at least in Texas, and I can only speak from that perspective. I was expecting to have more of a price break. So we bought a deal in the fall. I think we got a heck of a deal, and we were told from brokers that we could turn around and just flip it and sell it for a few million more right now. So I was expecting to have that pricing discount at least somewhat for a little bit longer, but that as soon as we had some winter storms here in Texas in February, as soon as that went away in that February, March timeframe, pricing has been on fire. Lots and lots of people, the bids are getting crazy. So as far as, I'm very bullish. We look in the Texas Triangle, so that's DFW, Houston, Austin, San Antonio, and just very bullish on the area. And, I don't know if I have any necessarily predictions over the next 6 to 12 months. I think at least Texas, I think will continue to do well. It'll be interesting to see whether some of the people buying stuff that are really aggressive right now, whether, that ends up, going well for them or not. But I think demand's going to remain to be high. We're, all three of those metros can compete with any other metro in the country as far as population and job growth. So I think everything will just keep rolling. Everything I've read on interest rates are that they're supposed to be low for the next 3 to 5 years, depending upon which who you listen to. So as long as interest rates stay low and there's not too much of as long as the markets are liquid and you can obtain financing, I think things will continue to flow well. If for whatever reason the lending does seize up or anything like that, that's when that's what happened in 2008, 2009. When there's no liquidity in the market, then that's when you start to see stuff take a dive.
What's your best source for meeting new investors right now?
Right now, it's online. We have networking every 2 weeks. We're starting to do. Some people are a little more aggressive, and I don't say aggressive, but they're having large meetups and all that. We haven't done that. We're going to start doing some small dinners. Dozen people or so. We've been doing hiking with investors. just kind of a, fun thing, get outside and all that. But it's mainly been online to right now. And then, I'm fine with going to network and all that. But there, a lot of the events are just starting to open up right now in DFW.
What about just the number one thing that's contributed to your success?
I would say mindset would be number one. And I'll kind of give there's 2 or 3 thoughts on that. So, the first thing is you got to believe you can do it. If, why is anybody else going to believe in you if you can't believe in yourself? 2, I am a huge proponent of whatever you're wanting to do in life, whether it's multifamily or I like to run. I hired a coach. So I'm a huge believer in hiring a coach or going to partner up with people that are doing what you want to do or can do what you want to do. And so whether it's me learning to swim or running or multifamily, I've partnered up and I've hired coaches. That's kind of, there's really only a few recipes for success. I think that's one of them. And then the other one is it's the Jim Rohn quote of you're the average of the 5 people you hang around. So, if you're wanting to do a multifamily, go hang around multifamily people. If you're wanting to go, be a runner, go hang around runners. If you're wanting to be a really good soccer player, go hang around soccer players. It's not rocket science.
And how do you like to give back?
I'm on the board of Cancer Care Services. And so they're based in Fort Worth, and I am looking for other opportunities to give back, but that's kind of the main one. So we recently formed a partnership with a few apartment complexes, and so Cancer Care Services. If people have cancer and they're in need of resources, not only financial, but through counseling and just kind of other resources as well. They can be a resource for the tenants. So we just kind of formed a partnership with a few apartment complexes, and turns out, we wish they didn't need our services, but these complexes do have a few residents that are battling cancer and could use the services. And so we're excited that we're able to help out and all that. So we're going to continue kind of rolling that out more so. And so really excited about that, and just really excited and grateful that these apartment owners are really receptive to this. It's in my opinion, it's a win-win-win all around. It helps the tenants, obviously. It helps the apartment owners because the cancer care is going to, potentially help them get more of their, continue to get their rent payments. And then it's a win for the community because no one likes evictions. They're terrible. And so it's just it's a good thing all around. And so we're looking to do more of that and looking to partner up more.
Awesome. Well, Dustin, grateful to have you on the show and just personally get to know you a little better, hear more about your story. Just difficulties of working full time, syndicating deals, working with investors, family, all those things. I was doing the same thing. Definitely not easy, but you got to push through, right? Until you can finally make that split like you did, or shift from W-2 to full time. And just appreciate you sharing those things, even to stress testing and the importance of location and just numerous things that you shared. How can the listeners get in touch with you and learn more about you?
Yeah, probably the best way. So you more than welcome to add me on Instagram. It's just Dustin, I think Dustin.Miles. My email is Dustin@momentummultifamily.com, or our website's just momentummultifamily.com. We'll kind of preface it. If you follow me on Instagram, you're going to see multifamily, you're going to see working out, hiking, and my son. That's it. So
Thank you for listening to the Real Estate Syndication Show, brought to you by LifeBridge Capital. LifeBridge Capital works with investors nationwide to invest in real estate. while also donating 50% of its profits to assist parents who are committing to adoption. LifeBridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.